Hi, I'm James. Welcome to Sketching Finance, where we simplify finance through visual storytelling. Welcome to the channel. Today, we're looking at a number that should terrify every tech investor: $34 billion. That is the massive amount of market value that vanished from CoreWeave in just 6 weeks. It's not just a drop, it's a financial earthquake. According to a bombshell report by the Wall Street Journal, the hottest company in the AI infrastructure world has seen its valuation slashed by nearly 50%. This is the first major sign that the AI mania might be meeting a very cold reality. Is this a temporary setback or the beginning of the end for the AI boom? Today, we'll dissect the anatomy of this crash, from freak weather to risky debt traps, and what it means for the future of your investments. You've heard the old saying, in a gold rush, don't mine for gold, sell shovels. In the AI revolution, CoreWeave was the world's most successful shovel seller. They didn't build the AI software, they provided the massive computing power that runs it. They built specialized data centers filled with the most powerful hardware on Earth. While big tech was fighting over chips, CoreWeave was building the homes for those chips at a speed that left everyone else in the dust. What made them invincible was their elite partnership with Nvidia. They had priority access to the rarest chips on the market. This led to a valuation that soared past $70 billion, making them the undisputed kings of AI infrastructure. But in 2025, the digital world collided with the physical one. CoreWeave's massive expansion focused on Texas and Georgia. Then, nature struck. Severe storms and flooding hit these regions, proving that even the most advanced tech is still bound by the laws of weather. Construction ground to a halt. In the world of high-stakes tech, a 1-month delay is a disaster. Without roofs and stable power grids, those billion-dollar chips sat in boxes instead of generating cash flow for the company and its investors. Every day the sites stayed quiet was a day of lost revenue. For a company valued on perfect growth, these delays were more than a nuisance. They were a signal to the market that CoreWeave's rapid expansion was much more fragile than it appeared. To grow this fast, CoreWeave didn't just use their own money. They borrowed billions. This wasn't just ordinary debt, it was high-stakes leverage designed for a world where interest rates are low and growth is guaranteed. The most shocking part? They used the Nvidia chips themselves as collateral. If CoreWeave couldn't pay back the loans, the banks could literally take the hardware. It was a massive gamble, betting everything on the idea that nothing would ever go wrong. As construction delayed and interest rates remained high, the cost of this debt became a crushing weight. When you're paying millions in interest but your data centers aren't online yet, you're burning cash. The market saw the smoke, and then the fire started. Are we repeating the year 2000? Back then, infrastructure companies like Cisco were the stars of the show before they crashed. Many analysts believe CoreWeave is the canary in the coal mine, warning us that the era of growth at any cost is ending. The big question for 2026 is simple: where is the ROI? Investors are tired of hearing about potential. They want to see real profit. If the buyers of AI services slow down, the companies that built the expensive infrastructure will be the first to fall. This doesn't mean AI is a fraud. It means we are entering a survival of the fittest phase. Only the companies with real cash flow and manageable debt will survive this winter. The hype is over. The business of AI has finally begun. The lesson for you as an investor is clear. Never let FOMO drive your decisions. Look past the AI label and check the balance sheet. Understand how a company is financed before you put your hard-earned money into the next big thing. Diversification is still your best friend. The AI revolution will change the world, but it won't be a straight line up. Protect yourself from the storms, both the literal ones in Texas and the financial ones on Wall Street. Is the AI bubble bursting or just cooling down? Let us know in the comments below. If you found this breakdown helpful, subscribe for more deep dives into the stories moving the markets. Stay rational, and we'll see you in the next one.